Thanks for being here this afternoon, and it's great to be here on behalf of your board of directors to share a little update to you. Our cooperative is in a really strong financial position this year. What this has done is it allowed us to be positioned to invest in our team, our people, and our technology to better serve our customers. This also means that Farm Credit's team can continue to focus on serving our customers and building relationships with you, as well as providing the convenience and efficiency of the digital tools that many of us have come to really appreciate. We also know that the competitive rates are important to you, and we continue to offer patronage dividends year after year, a commitment we've made for almost 25 years. So at this point, I'd just like to touch on a couple of things. And the first off is the merger opportunity I'm sure you all have heard a lot about. So earlier this year, we had the opportunity to consider a merger with our neighbors, Yankee Farm Credit. A question I often get asked is why now? Why hasn't this done before? Why are we doing this now? And the answer is because the opportunity came up. Their CEO got an opportunity to go to CoBank, and that gave the Yankee board an opportunity to decide, what next for them. So they reached out to us, and I can tell you that it's a really good strategic move for both organizations. Yankee has been a key strategic partner through the years. We are funded by the same bank, which is CoBank. We've worked together on many strategic opportunities such as Farm Start, crop growers, and ag enhancement. And of course, it just offers an excellent geographic and cultural fit. Through the process, what we've all determined is honestly that we're really more alike than we are different, and it just makes a lot of sense for everyone. So where are we in the process today? Many of you should have received merger packets and documents, as well as your ballot to vote. So I just want to take a moment to just kind of back up and work into that and kind of why we're at and where we are today. So I can tell you that since a phone call beginning of January from Mike, that while this was not on either association's radar or in our business plan, the analogy I often make is just like all of us, if the farm next door comes up for sale, you're probably going to buy it. It just makes sense. It's the right thing to do. So I can tell you that both teams have worked really hard together through the last year. Great teamwork by the boards and management teams alike to get where we are today. In August, we had a joint board meeting with both association boards for our strategic planning. That offered us the opportunity to really get to meet and know each other a little better on both staff and the boards alike. And at the end, we were able to do a financial modeling exercise that really kind of brought home what our goals are for our long-term goals as we reflect on our business plans moving forward. And three of those main points are to be within that 16 to 18% capital range, 2% ROA, as well as continuing to give back 125 basis points of patronage. Both boards are very committed to those goals. At the same time, both boards also committed their commitment to stewardship, giving back to the communities where we live and to the industries we serve. And in corporate governance, that is often referred to as ESG, which is environmental, social, and governance. These will include issues related to diversity, equity, inclusion. Basically, we all think it's just doing the right thing, right, and giving back to our community. So we reaffirmed our commitment to that as well. So at the end of the day, the current status of this merger has been approved by our funding bank, CoBank, is by our administrator, FCA. As I said, everyone listening, you should have all at this point in time received the merger documents as well as a ballot. And we're in the voting process. So I'm just asking everyone to please vote. Clearly, both boards have unanimously backed this. So we ask you to vote yes as you consider your vote. Our voting deadline is November 19th. The 18th is the deadline. The 19th is the day that we will know the outcome. So again, we ask you to please exercise your right to vote in this. The last point I'd like to make before turning it over to Mike here is in regards to just the continued commitment to a strong governance model through our association. As a cooperative, clearly you need a good vision, good goal, strong management, but you also need strong governance. And I can tell you that both boards are committed to maintaining a strong cooperative model for generations to come. So as you can see on this slide, this is assuming the merger goes through, that will give us 3 regions. If approved, each director election region will change slightly. And but initially coming over, Yankee Farm Credit will have 3 board members on the board, and the ultimate goal is to get down to 12 elected directors from 3 regions. So that brings up my final point of director elections. As we enter this time of year, I would urge everyone to consider, whether it's now or certainly in the future, to consider running for your board. It's an important part of our governance. This year, assuming again merger approval, there will be 3 seats up for election. 2 will be in the central region, currently held by Jamie Jones and Mike Brooks, and 1 in the western region held by Terry Zittle. It's kind of the step to this. Anyone who is interested, we always encourage you to be involved. Be involved in your cooperative, whether that's serving on your local customer service council, attending meetings, giving feedback. We're asked, we are starting an initiative for a young cooperative member, so we're hoping to kind of start a little more grassroots, getting people involved. And this was really where it starts, as well as serving on the nominating committee. So in closing, again, just ask everyone to thank you for being here, ask you to remember to vote and for the merger, as well as in your upcoming elections, and please consider running. So with that, thank you, and I am now going to turn it over to our CEO, Mike Reynolds. Thank you.
Thank you, Laurie. Good afternoon, and once again, welcome to our customer appreciation event. It's my pleasure to join you this afternoon. Just share a few thoughts about today as about the future, so happy to do that for you. So let me just recap. Laurie did a nice job, as well as the video recapping that overall our financial results are on track to meet all of our budgeted targets for this year. And of course, that means our ability to continue to pay the patronage that you've come accustomed to. I think equally important is the overall credit quality of our portfolio, the percentage of our accounts that really are free of any material weakness as we're rated by outside agencies and others. It's just been a true testament to our customers, how you have all kind of weathered the COVID year and the challenges of 2021 as well, to really put us in really the best credit quality we've had in recent memory. So congratulations and thank you for all you've done. The other thing that we often talk about that contributes to our overall success is really the diversity. And I would look at that from 2 different perspectives. One would be the diversity of our portfolio. That's all the different industries we serve. It's always served us well that when one industry may be in a down cycle, others are in a very positive, strong cycle. And we've seen that play out again here in both 20 and 21. So the diversity has really played well. But I would also talk about the diversity in our product offerings, and we have expanded our offerings over the years beyond just traditional agriculture, but also into our country living program, which finances rural properties, so those who are other than primarily farmers, as well as our commercial lending group, where we partner with other entities across the country, Farm Credit and other banks, to serve some of the larger customers and share the risk as well as share the reward. So overall, very positive results as an organization. And once again, thank you for all you've done to contribute. So as we look ahead out over the horizon, look at both industry conditions and outlook conditions, I would say that there's a variety of topics here, and I won't go through all of those in great detail, but let me just touch on a few. So as we've been out this summer and this fall doing customer visits, customer appreciation events throughout the territory, a few things pop up over and over as things that are issues for our customers that we need to be aware of and do what we can to help. Obviously, number 1 would be labor. The availability of finding quality labor continues to be a challenge. We're aware of that. We're doing what we can to provide the credit and services to help people get through that. Obviously, along the same lines, the supply chain discussions, we hear it over and over again in terms of whether it's inputs, parts for equipment, new equipment, it doesn't matter. We know there are challenges out there, and I think that's just going to take time to work through the system before we get back to normal. Laurie mentioned ESG, the environmental, social, and governance issues. Probably the most common version of that you would hear on the news would be around climate risk and climate change. That is an issue that we are keenly aware of. I would tell you it's becoming more and more prevalent in the conversations across the system and across the country. And we are committed to doing our part to making sure we move forward in those areas. The only other one I would touch on right now, obviously, is interest rates. And again, interest rates really can only go one way from here, and that's generally up. We have been in extraordinary times in terms of the lowest rates in the course of my career. And the good news is customers have taken advantage of those opportunities to lock in some very attractive long-term rates, providing real financial benefits to their businesses for years to come. I guess the only thing I would add to that is I would say there's still time to do so. And if you haven't had a chance yet to discuss fixed rates with your loan officer or your local branch, you might want to consider doing so before rates go up. So as you look across this slide, obviously an array of challenges that are out there facing customers, but I think the most important thing is we continue to be impressed with the resiliency and the ability of our customers to meet those challenges and continue to do very well. Again, Laurie touched on the merger and the outlook. As she said, it makes sense for both organizations. And quite honestly, that's the best type of merger you can have when it's a win-win for everybody. It does add to our capital base. It adds to our diversity. It adds to our geography. It'll also add to our overall profitability, as there's a significant amount of business in Yankees territory that we think we can add to. First of all, by bringing back some business that was otherwise sold off through CoBank or other partners. So why would they have to do that? Well, as a smaller organization, as Yankees customers continue to grow, there's only so much that you can lend to any one customer to avoid taking on too much risk. So Yankee would have to partner with banks like CoBank, a very key strategic partner for both of us, and move some of those balances over to CoBank, which the earnings go with that. So simply by bringing our two organizations together, we can combine our capital base, do more for more customers, but also reach out to new customers because we've already launched our country living program in Yankees territory and finding some very early strong success in that area. Also, I would say it's been a pleasure and a privilege to get to know the Yankee team over the last 6 months. As Laurie said, we're a lot more alike than we are different. We have been through training together. We have a lot of the same history. We're sharing a lot of other ventures. They're just like us, and I think they're going to be a great fit. They're going to add depth and breadth to our team here over the coming years. So the last and again, most important point here, please vote. There's still roughly 10 days or so to get your vote in. And it is important to vote in order to move our organization forward. So from here, I'd like to just spend a few minutes, I guess, talking about our vision for the future. Obviously, there's challenges today. We have a great history that we're building on, but it's really about where do we go from here. And so for me as the CEO, I would say my primary vision for the organization is to really bring together one team. We will be approximately 600 employees across the Northeast to work together to serve all the needs of all of our stakeholders. And stakeholders being customers, and being staff, our strategic partners, our regulator. We have to serve all of them well in order to be successful as we go forward. Now, I realize there's a lot on this screen. I don't expect you to be able to see it all or read it all. But as we think about a couple of different quadrants, let me just go around starting in the upper left. We think about what it might take for us to be a perfect competitor in the marketplace. That's changing all the time. Upper right would be, if we had a magic wand, what things would we fix right away, make those go away, and make life easier? Lower right, what does the ideal user experience look like? And then we finish up on the lower left with where do we want to be in 5 years? Again, it's a bit of a pictorial approach to things, but it gives people a sense of our goals and our vision for the future. So around that, everything centers around kind of 5 key principles, and I will go into those in a little more detail and talk about a few of those. But I think for us to meet all of those objectives, we really have to be strong in 5 areas. First would be what I call operational excellence, and that goes beyond just operating on a cost-efficient basis, although that's a big part of it. But we have to meet all of the regulations that are out there in order to have good standing with our investors on Wall Street. By far, our number one expense continues to be interest expense. So the stronger we are, the more compliant we are in terms of meeting all of the rules and regulations, the safer our investors feel, and the lower they will lend us money. And that's our biggest expense. I would also talk briefly about quality growth. That's just not our organization. We want to be able to grow so that we can grow with our customers' businesses. As I talked earlier, larger businesses have bigger needs, and we need to be an organization large enough to serve all the needs of all of our customers. I'll talk about each of the other 3 here in just a moment, but it's commitment to our communities, protecting customer information, and really building an outstanding experience. CX is customer experience, EX would be employee experience. Let me talk about the customer experience for just a moment. Really, the history of our approach has been building very personalized one-on-one relationships, either with a loan officer or your tax preparer or any financial services professional. And that's going to continue to be the focus of what we do. Personal relationships on the farm, in the kitchen, on the tailgate, wherever it is. But what we're trying to do as we get into a digital world is bring in some additional tools to enhance that experience. Let me be clear, not to replace it, but to enhance it. And so over the next couple of years, you'll see more and more digital tools. Some of those we're already rolling out already. But what I'd ask you at this point was to tell us how we're doing. Obviously, as a co-op, our board of directors are all customers who provide us valuable feedback at each and every meeting. We do have local customer service councils. That's an advisory board at each branch. So if you have interest in participating in that process, please speak to your loan officer or branch manager. And most recently, we just launched a survey tool that will, on a very limited basis with very few questions, I don't want it to be a burden to all of you, but ask a few key questions after each experience with us. And that will help provide us guidance as we fine-tune our strategies as we go forward. The other thing I would say is that we need to take advantage of our benefits as a co-op. And the way I look at it, every dollar that we spend is not our money, it's our customers' money. And so we need to invest it wisely. And in return, as a co-op, the more that we take advantage of those tools, the more we collectively save for our customers and are able to return. So for example, I'd like to thank everybody who opted in for the digital receipt of our merger packet. Probably doesn't sound like much. There's a significant investment simply in printing and mailing packets of that size. Same goes for our annual reports and other things that we could now send electronically. And if we can get customer enthusiasm and adoption to receive those electronically, we can save the organization and ultimately you, our customers, money. So we've had great success. We have rolled out a new online banking platform. Customers are starting to roll in that. Automatic payments, certainly DocuSign for electronic signatures, are all benefits to both customers and the company. I would talk just for a minute about another pillar, and that's really our commitment to our communities. We are very, very fortunate to live and work in communities who have been very supportive of who we are and what we do. And I believe we have an obligation to give back to those communities in a similar fashion. You can see several of the things that we do right here. One that I would mention, or the standout, would be the Farm Credit East Cares. That is a charitable foundation that we set up roughly 10 years ago, really in response to some natural disasters within our territory here in the Northeast, helping communities and individuals recover from those disasters. We are quickly approaching the $1 million in total donations. And I would say one of the things that we're most proud of is that many of those dollars come directly from our staff who contribute to the foundation right out of their paychecks. So our staff are as committed as anybody to giving back and caring about the communities we live in. Finally, I would be remiss if I didn't take a moment to thank our outstanding team for all they have done particularly over the last 2 years in the face of COVID and the other challenges. Just like many of you, they've had to face the challenges of children being home from school, having to educate them while doing their jobs and serving our customers. But I would tell you they have done nothing short of an outstanding job. The board and I are very, very proud of everything they've done and thank them for their efforts. So going forward, we have a unique responsibility to create an environment, best in class, if you will, create that outstanding employee experience. Look, we want to attract, train, and retain the best possible talent we can to better serve you. And we want to have systems in place that allow them more time to be out on the farm or at your businesses, helping you through your issues. So once again, thank you to our team. They've done an outstanding job and look forward to the future. So again, as we look forward, certainly we have a great history that we're building on here, but we have to continue to invest in our co-op to keep it current, modern, and forward-thinking. So we will continue to invest in tools and technologies that we think bring you a better experience. And I would also just take a moment to thank the board, who has been extremely supportive of the things that we're trying to do here over the next few years. really to reinvest, meet your needs, invest in technology, as well as provide diversity, equity, and inclusion to a great team of people. So as you heard, this is a customer appreciation meeting, so I would be remiss to not say thank you. Certainly thank you for your business. But as it says here, we really appreciate how you've done business, particularly over the last couple of years. You have proven that you are essential to local economies and the communities that we live in. So again, thank you for your business. We do know that you have choices, and we appreciate you choosing us as a provider. So before we wrap up here, certainly it is easy to turn on the news and hear negative stories, debates in politics, whatever it may be. But over the years, I've had a unique opportunity to meet some really amazing families. And one of them here is the Freeborn family, family I got to know during my time in New Jersey. And as you can see here, Zach Freeborn, the son of the one member of the family, went to pretty extreme measures to propose to his fiancee a wedding proposal. They do a corn maze every year, and unbeknownst to his fiancee, it was planted with a marry me question. And so here this fall, Zach, they went up in a helicopter and popped the question in the most amazing way. So there are lots of good stories out there. We're happy to be a part of it. Very little part in this case, but happy to be a part of our customers as they go through their life journey. So congratulations to the Freeborn family. Certainly best wishes on their future. And so with that, let me pause. I believe we have some questions that were either sent in advance or have been chatted in. So Tom Cosgrove will join me here and we'll take a crack at them. Great question. I guess in its simplest form, I would probably have to say that's a work in progress. Obviously, there was a lot being talked about in terms of a few things. One would either be lower estate limits or the potential loss in what they call a step up in basis through the inheritance process. Both of those would be significant to a farm family whose equity is largely tied up in the real estate. But to the best of my knowledge, none of those proposals have survived the current bills that are going through Congress. We'll continue to monitor that closely, but as of now, nothing new to report. Just to repeat the question, I guess, so people can hear it better. Can we still switch our variable rates to a fixed rate? The answer to that is simply yes. As I mentioned earlier, rates are coming off historic lows, and particularly fixed rates. So those will always go up before variable rates go up. So I would say, if you're interested in fixing rates, I would reach out to your loan officer sooner rather than later. So the question is, how will the upcoming merger affect customers? And I would say in its simplest form, we hope to make the merger process as transparent as customers, particularly the Farm Credit East customers. Certainly, I think for the Yankee customers, they'll experience some new software, some new tools. But quite honestly, if from our perspective, we handle the merger as well as we intend to, it should be completely transparent to Farm Credit East customers on January 2nd. So has the pandemic had any effects that are going to increase rates? Certainly, I would say to starters, the pandemic has really been part of the cause of lower rates, and we're working through that right now. Directly, will the pandemic raise rates? I would say probably no to that. However, longer term, will it impact our costs in terms of, costs for all of our customers as well in terms of income taxes and so forth. We certainly have stacked on some significant national debt during the process. And obviously, we're going to have to pay for that at some point in the future, but no direct impact in terms of raising our rates here in the near future. Repeating the question, was the impact of the pandemic in two fronts. One would be on our country living program. Certainly that impacts a segment of customers who are primarily reliant on off-farm jobs. Then the other question was around the supply chain and how that's playing out. So relative to country living, ironically, it's been a huge boost to country living. So again, this program typically finances rural properties. And as there has been a significant flight from the city to the country, that has been a significant a boost for country living. Obviously, for those existing customers, there was some risk as companies either shuttered for a while or completely went out of business of losing their jobs. But those have been fortunately few and far between. And I can tell you that as we have with any of our customers, when customers ran into challenges, we've done everything we can to provide some extra time to make payments, maybe interest only for a little while. So we're working with them. Relative to the supply chain, we're really seeing that on many, many fronts. whether it's getting, getting parts or even getting new equipment is just not there to get right now. Certainly, I think that's a longer term problem. I don't foresee that curing itself here in the next few weeks or months. Maybe there will be some relief in a few areas, but this really is a longer term problem in terms of getting our supply chain back on track here over the coming years. Next question. The question is, what are the impacts on fuel prices as well as minimum wage hikes? Take those separately. Fuel prices are going to impact beyond just fuel and diesel. Obviously, that goes into our fertilizer costs and everything else. We're watching that closely. We do anticipate, and we already are already seeing significant increases there. The bigger question on that front, from my perspective, is really about the supply availability. We've heard quite a bit about, will there be enough supply? We don't know yet. I think optimistically, we will figure it out and it will be there, but something we're watching very closely. Certainly relative to minimum wage and labor costs, that too would be an evolving situation, particularly for those customers in New York. We're very active monitoring the situation there. Our Knowledge Exchange group just put out a study that they did relative to the impacts of changing minimum wage and or overtime rules. If we could put the two of those together, certainly that would have a significant impact to our customers. So we will continue to be supportive and involved in the process with the legislatures and so forth, and monitor it very closely. So the question is, how much is climate change part of the national conversation? I would classify it as a growing part of the conversation, quite honestly. It is a topic that shows up in most of our national meetings. And really, there's two parts to that. One is, what will Farm Credit East's role be as an organization itself in dealing with climate change? And then the other question is, what is our role in working with our customers to combat climate change? And I think there's really two different sets of responsibilities there. Obviously, as an organization, we're going to be looking at it next year in terms of plotting a course for our role in climate change. And certainly, we are already available to help our customers work through any plans they may have to combat climate change. But I think we have a lot to learn. There's talk out there around the carbon banks and so forth, but we just have a lot to learn before we can really take a hard stance on that. Great question. Great way to end it is that we want to be clear. We are committed to continuing to do customer meetings across our territory in person where we can. What we've tried to do this year is we've tried to split it up a little bit because there are quite a series of meetings. We want to make sure we get around to everybody. Much like we did a few years ago, for those who were around when we had our centennial events, we did quite a few summer meetings this year. Those were a big success. It helped us connect with customers in a different way. And we do have quite a few in-person traditional customer appreciation meetings that we're going through right now. But what we wanted to do this year is in the face of local conditions, obviously COVID is still a factor in some areas. We wanted to give a little bit of flexibility and make sure our customers felt safe and welcome at an event. But rest assured, we are going to continue to do customer appreciation events and stay close to our customers as best we can in the years ahead.